Looking at the central bank moving to cut the CBR rate by 150 basis points to 16.5%. Was that an outcome you had expected?
We were certainly expecting a reduction, and it came in quite well within our expectations.
Now looking going forward, Eric, do you think we could possibly see more cuts coming through from the central bank? They did, however, warn that the current account deficit still remains pretty high. Inflation also still remains quite a big risk.
Yes, I think they'll probably try to balance it out. I mean, you have the issue of credit growth remaining quite high, and actually for this figure specifically, they didn't mention credit growth because over the last couple of months, they've been attributing year-on-year growth in terms of credit as one of the reasons why they had kept the benchmark rate unchanged. So, going forward, I think they'll have to look at the currency, how that behaves, and also, the inflation figure, whether it reaches the 9% level and how sustainable that level would be in order to decide whether to cut rates further.
Now looking at the currency, we did have it fall back a bit after that interest rate cut. Currently sitting at 84.15 against the dollar, not too weak at this stage. Your thoughts on the type of moves we could perhaps see for the currency going forward?
There's a sense that probably the currency is being supported by the current high interest rate environment. But I think probably those views are probably overstated, because if you're looking at really where an investor can put their money in, the 91 and the 182-day T-bills are now at around 11%. And the longer dated bonds are still a little bit expensive, but are still providing good return, but still probably not sufficient. I don't think there's enough hot money really flowing into the Kenyan economy. So I think if we can have FDI coming in well, we're probably going to see a bit of depreciation, but nothing significant.
Nothing significant to come through for the Kenyan shilling. But looking at the equity market, which stocks are likely to benefit on the back of this interest rate decrease?
Obviously, companies which have been borrowing or which have been requiring high levels of financing. If you look at the oil industry, for example, those are companies which need to borrow significantly from banks. Quite a number of companies have also been looking to expand. Obviously, some of the corporates have also been diversifying from local sources of financing to international sources. So it's probably going to be a balance, but I think on the whole we are probably going to see a shift from debt instruments into equities, because returns on debt, is actually coming off, and this reduction is actually a signal in that direction, which points to equities getting better support.
Equities getting better support. Now looking at British American Tobacco out with results yesterday, net profit increased by 20.6%, and it maintained its interim dividend to 3 shillings and 50 cents. Your thoughts on the results that came out of British American Tobacco Kenya?
We were actually a little bit disappointed by the earnings growth. We were expecting the numbers to be a little bit more robust than that. What management attributed was that they got less exports to Egypt, the cut rag exports to Egypt, and also the exchange rate having strengthened over the period also cut the gain that they had in terms of volumes, because volumes were actually up 12%. But the currency has been strengthening. So net, they actually lost that upside in terms of revenues. Margins, operating margins were actually improved. So net, we think we were a bit disappointed, but we'll see how the second half goes.
I was about to ask you about the second half. Your thoughts on the type of results we could see coming through for the second half. Now, ahead of those results, we saw the share price increasing about 2.7%.
Yes, I think it was just on speculation about how strong those earnings are going to be. So if at the going run rate, we are probably likely to see flat earnings for the full year, because we had the legislation which changed at mid last year, which really improved the environment for cigarettes, at least for BAT. But we didn't see that really coming strongly into the first half of this year. So at the current run rate, we are really looking now at flat earnings compared to probably a 20% increase in our previous estimates.
Now, Eric, the market currently struggling to get to that 3,800 points mark. What kind of activity can we perhaps see coming through for the market today and perhaps into the coming week?
I think a lot of it now depends on how corporate earnings come through. We're expecting the banking sector to start announcing in the next couple of weeks for first half results. And then a couple of full year earnings, East African breweries, Kenya Power, Kenyan, quite a number of large caps again announcing in the next 3 months. So I think those earnings will be very significant in determining market direction.